Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's a mortgage mom. She can get things done. When you're in need and don't know where to go, pick up the phone and call mom.
All right, so welcome to Mortgage Mom Radio. I am Debbie Marcoux. I am the Mortgage Mom. And this week we are going to be talking about, so last week, let's start there. Last week, I think I told you guys that the Fed Chairman Jerome Powell was supposed to be speaking this week. I thought that it was earlier. I thought he was talking actually before this show, but we are not going to hear anything about that meeting until this coming Friday. So we are not going to be we're not going to be able to talk about what did he say and what kind of effect does that have on us in interest rates right now, and what is the percentage of likelihood that they are going to cut rates come September. So that's going to be next week's show. So let me just preface it with that. I knew he was talking this week. I thought he was talking Monday or Tuesday. He is actually not talking until Friday. So they are actually at Jackson Hole right now. It is today, tomorrow, and Friday. Friday, we will actually hear him speak, and that is from the Jackson Hole Symposium. If you are interested in looking that up and learning more about it, and maybe even watching live what he has to say. But we won't be able to talk about that today. But we did talk last week about how interest rates were getting better. We had some really, good reports that had come out that kind of threw us into the downward motion with interest rates. However, where are we today? So did those interest rates continue to improve day over day since I did this show last Wednesday? Have they gotten worse? Have they held steady? What is going on and why? So we are going to talk about that. Then I also promised you guys last week that we would jump into very quickly what goes into your interest rate when they are giving you a rate quote. So that is very important as well, because you guys do need to understand what type of loan that you have and what could be changing an interest rate that you might get over maybe an interest rate that your, neighbor might be quoted. So we will speak about that as well. So this will be with the market and what is going on. And then of course, next Wednesday, we'll be able to talk about that Jackson Hole Symposium. What did the Fed say? What is the likelihood of that Fed rate cut happening? And then also, if the Fed does cut rates, what are we expecting is going to happen? What do we think will happen with interest rates when they cut? Do we think that mortgage rates are going to improve? I told you guys in last week's show that it's very, very slow. So I'm going to talk a little bit about that as well. So that will be next week's show. Why is it slow? Should you be waiting to do it? Financing until we hear in September that they are or they are not cutting the prime rate. And I'm going to give you guys a little precursor to that. No, you should not be waiting, and I'll explain in more detail next week why. Remember that this is an open show. You guys are more than welcome to ask your questions, and I will read them out loud and answer them for you. But we are going to jump into what have interest rates been doing so far this week. So, and what did they do Thursday and Friday last week? So we actually saw interest rates improve quite a bit. We actually had a really nice rate rally Monday through Wednesday. And then Thursday, we kind of started to lose a little bit of steam. Friday lost a little bit more steam. Yesterday, little bit more steam. And today, same. So we are actually kind of flat. So we got a nice little improvement. And I told you guys this before, they do move pretty quickly when we get those improvements. Then we will see a nice bump down in the interest rates. And then all of a sudden we'll kind of see them. Well, we'll see a nice drop in the rates. Let me go that direction. And then we'll start to see them kind of inch back up again. So we have these, we've got these numbers that we have not been able to break through. We've got these barriers on a high and on a low, and we have not broken out of them in either direction in 10 months. And I did mention that in last week's show as well. So for 10 months, we have been holding within these two top and low patterns, and we start to see things really rapidly improve, and we're getting close to that barrier, and we just can't quite break out of it, and we can't get to that next level. But the same thing is happening with interest rates increasing. We've got that same barrier where we've got a high that has not been broken in 10 months, and we get to that line, we get to that barrier, and then it bounces off of that barrier. So we are staying right now, we've kind of been bouncing within about a 50 basis points area for about the last 10 months. So what does 50 basis points mean to you in interest rates? 50 basis points is about an eighth of a rate in interest rate. So about 0.125% in interest rate that we have been bouncing up and down over the last 10 months. Now, we might have actually improved a little bit more than that. I'd say that we got about 0.25. We got about a 0.25% better, but it lasted for less than a day. And then all of a sudden now we're kind of back. So really the general, those barriers, that high and that low, have really been kind of stopping the market over that last 10 months. So what do we need to happen to be able to bust through those barriers? So number one, we could see something break out after the Fed does talk this Friday, right? So depending on what he relays as far as will we see a rate cut or not come September, or what is the indicating factor as we read through the lines of what he actually says, right? Because a lot of it is reading through the lines and trying to understand what he is saying. So, that could be something that could possibly break us out in either direction, in between those barriers that we've been bouncing in between for the last 10 months. What else could change? So if we get an unemployment report that is either really good or really bad, we could finally see a breakout. If inflation comes in lower than expected in all parts of the inflation readings, right? So we've got PPE, we have CPI, we've got all these different inflation readings and reports that come out. So if one of those inflation reports were to come out drastically better or worse than what is expected or anticipated, we could see that we finally break through some barriers, and that could go in either direction. So I do see Joe says hello, and I can see Lori says messages not going through. Lori, I'm so sorry. I don't know why it's doing that. I just clicked on a different side of my messages, and for some reason I am not seeing anything that is from Facebook at all. So if you are watching me on Facebook, for some reason messages are not coming through. I can see YouTube messages, so those are coming through. But Lori, I do see your message now, so maybe if you have a question, you could go ahead and put that in. Let's see, let's change this to live chat, and maybe we'll do participants. That doesn't seem to be helping. I guess that I will have to get my son in here because he is my guy that fixes all of this. I might have to get him in here to try to figure out what is going on with the comments. But John Doe, I can see you, and Lori, I can see you. So if you guys are trying to message me and I'm not seeing the messages or I'm not reading them out loud, I am so very sorry. I am not doing it to you on purpose. I am not seeing those messages come through. So we're going to have to get that chat fixed. So I do apologize. But just try to keep seeing if they'll come through, and then maybe I'll see them. I just don't know how to fix it. Let's see. There's one more box over here if I click it on. Read. Yeah, I don't see. I'm going to have to get the sun in here. I apologize, guys. I do apologize for that. Okay, so John Doe says, I thought 50 basis points was a 0.5%. So that's a great question. Basis points is actually different than what interest rates are. And Lori, I can see you're okay. So the two of you guys have messages coming through. If other people don't, I'm so sorry, guys, if your messages are not coming through. Make sure that you are subscribed to the channel, because you do have to be subscribed in order to be able to put in a comment. So make sure that you do subscribe if you want to comment or leave a message. But let's get into basis points so you guys understand what that is. 50 basis points is not the same as interest rate. So on a rate sheet that we have an interest rate. And so let's just pretend that interest rate is 6.25. Then we've got basis points and we've got pricing for that 6.25. So that 6.25 may end up costing you a certain amount of money. We're reading what the cost is on the basis points. It is completely different. Let's see. It says, no, still having the issue of you breaking up. So maybe I'm breaking in and out as far as sound. And I'm so sorry if that is happening. So maybe what we'll do is we'll try to finish up the show early today. I'll try to get all the technical pieces fixed. And then next week we can be back on up and running, nice and clean and fast, and everybody's messages coming through. But anyway, if you look it up, so if we Google it real quick, and I'm going to Google basis points so that I can read this to you. Because it's probably the easiest way for me to explain it. So basis points are a unit of measurement in finance used to express changes or differences in percentages, especially concerning interest rates and yields. Here's how they relate to interest rates. So it is just a measure of it's a factor that we use. And when we see the basis points changing, we know interest rates are going to get better or worse. 100 basis points will typically, and every loan program and day is different, but they will typically change an interest rate by about 1/4%. So how do they relate to interest rates? Definition: 1 basis point is equal to 0.01%, 1/100th of a percentage point. So 100 basis points equals 1%. But that is not how we look at it as far as the interest rate that you are getting. So we need to move so many basis points to actually move the interest rate by particular percentages. So I hope that explains it. It is, you do want to research it, get on Google and truly get an understanding of what those basis points are. But they are a factor that is in play with what interest rate that we are, quoting to you that day. And it is, when I'm talking about basis points, I'm referring to how much that the market is moving in basis points. So I do hope that helps. But to wrap things up, you guys, because it seems like things are not going very smooth today. It seems like my chats aren't working very well. Lori says that I'm breaking up as far as my sound. So I think that I probably need to get the kid in here to get the systems get back in check. Maybe we've got some updates that need to take place. But the most important thing is that this Friday, there is going to be that Fed Speak. We're going to hear him talk from the Jackson Hole Symposium. Depending on what he says, is going to tell us whether or not we should be anticipating that Fed rate cut in September. Next week, I'm going to talk about, should you be waiting to lock in an interest rate before they announce a Fed rate cut, if we believe that is what is going to happen still by next week. And I'm going to talk about how the rate sheets work, and I'm going to talk about how your interest rate quote will work. So I'll jump into all of that next week. We'll get a little bit more deep dive in interest rates. Should you wait? How do you get quoted a rate, and all of that good stuff. So I'm going to shut it down for now. It seems like we're having some issues this week on Wednesday. But I hope you guys enjoyed the show. I hope I brought you guys some good information for now, and we'll have a lot more really good information come next Wednesday. So make sure that you guys are, when I go live. Make sure you get the text message to let you know that I am live. Text the word live, LIVE, to 844 844-935-3634. That's 844 We Lend for You, WELEND, and the number 4. That is the number to reach out to me. That is the number to call my office. That is the number for everything. But text live to that number so that you do get a text message when I do go live and you never miss an update. With that, I hope you guys have a fabulous rest of your week, and I will talk to you guys all real soon. Bye-bye.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.